He wasn't born into money. He didn't have a Wall Street background. And yet, in less than 2 years, this man turned $10,000 into $42 million. A transformation so massive that it shattered a Guinness World Record. But what's more shocking? It wasn't luck. It was psychology, a mind tuned so tightly between patience and aggression that the line between chaos and control almost disappeared. This is the story of Dan Zanger. And if you stay till the end of this video, you'll understand not just how he did it, but how you can rewire your own trading mind to think, act, and execute like he did. If you're watching this right now, take 2 seconds, hit that subscribe button, drop a comment with where you're watching from, and if this kind of trading psychology content speaks to you, like and share this video. Because what you're about to learn could permanently shift how you see trading forever. Imagine this. It's 1998. The internet is exploding. Stocks like Yahoo, Qualcomm, and eBay are flying off the charts. And somewhere in Los Angeles, a man named Dan Zanger, once cleaning swimming pools to pay rent, sits in a small apartment with a simple trading setup, a dial-up connection, a few monitors, and a deep, obsessive hunger to understand market behavior. Every night, he studied chart patterns, not casually, but like a scientist decoding DNA. He wasn't looking at random lines or chasing news headlines. He was hunting psychological footprints, the emotional rhythm of the crowd. Fear, euphoria, greed. He realized that behind every chart breakout was human emotion crystallized into data. While most traders were chasing stories, Dan was chasing structure. And that made all the difference. But the real transformation didn't start with a chart. It started with something far more difficult to master, his own mind. You see, before he ever made millions, Dan spent years losing. He blew up small accounts. He overtraded. He got emotional. He did everything most traders do when they're trying to make it big. Until one day, he realized the problem wasn't the market. It was him. That realization hit hard. Because when you've spent years believing the next stock pick will save you, and then you realize the real game is psychological, it shakes you to your core. So Dan did something radical. He stopped focusing on money. He stopped focusing on being right. And instead, he started focusing on reading human behavior through price. That's the shift that changed everything. He became a student of emotion, and charts were simply his textbooks. He'd spend hours each day flipping through hundreds of charts, studying how stocks behaved before explosive moves. He learned that patterns like cup and handles, ascending triangles, and tight consolidations weren't just technical setups. They were emotional signatures of accumulation, confidence, and fear giving way to greed. Dan was building a mental model that few traders ever reach. He wasn't reacting to price anymore. He was anticipating the psychology driving it. That's when the game began to bend in his favor. By the late 1990s, Dan had tuned his trading psychology to a razor's edge. He'd sit for hours, doing nothing, waiting for the perfect alignment of market sentiment, pattern, and volume. When others saw boredom, he saw discipline. When others saw risk, he saw opportunity born from hesitation. Then came the moment of ignition. In 1999, the dot-com bubble was inflating fast. Momentum was everywhere. Stocks were doubling in weeks, sometimes days. But instead of losing control in the chaos, Dan thrived in it. He had spent years conditioning his mind for this exact storm. While others chased hype, he followed structure. While others hesitated, he executed with surgical precision. He started buying breakouts on companies like Qualcomm, AOL, and Broadvision. And as the world laughed at the tech bubble, Dan Zanger quietly turned $10,000 into over $1 million. Then $5 million. Then $42 million. But the psychology behind that run is what truly matters. Because when you go from $10,000 to $42 million, you're no longer battling the market. You're battling yourself, your ego, your fear of losing what you've built, your temptation to overleverage, to protect, to act emotionally. And this is where most traders collapse. But Dan didn't. Why? Because by then, trading had become a mental discipline, not a financial one. Every time he entered a trade, it wasn't just an entry signal. It was an emotional test. Could he sit through volatility? Could he hold his winners longer than felt comfortable? Could he sell when everyone else was euphoric? These questions became his psychological compass. He wasn't trading to make money anymore. He was trading to stay in alignment with mental precision. The truth is, making millions in a bull market is easy. Keeping your sanity while doing it? That's where the legends are born. Because when numbers grow from thousands to millions, your brain starts to distort risk. What once felt like a small pullback suddenly looks catastrophic when your position size is in 7 figures. Fear of loss magnifies, and greed whispers louder than ever. Dan's greatest weapon wasn't his chart reading. It was his ability to stay emotionally neutral, to detach, to act without ego, to play offense and defense at the same time. That's what separates a hot streak from a breakthrough. He wasn't trying to control the market anymore. He was controlling himself, inside the market. That's what traders don't understand. It's never about the system. It's never about the indicator. It's about whether you can sustain mental composure under escalating pressure. That's what Dan Zanger mastered. And this is where most traders fail. They think they're looking for a better setup, a better risk-reward ratio, a better entry. But what they're really looking for, without realizing it, is mental clarity. When your mind is chaotic, every candle looks like an opportunity. When your mind is centered, you start to see structure. And structure is what builds empires. Dan's story isn't about turning $10,000 into $42 million. It's about turning chaos into clarity, fear into precision, and impulse into mastery. That's the true psychology behind his rise. And in the next section, we'll dive even deeper into the inner transformation that allowed him to keep going when everything around him was screaming to stop. Because the market rewards not those who know the most, but those who can remain the most stable when money starts to test their limits. Stay with me. The next part might change how you view trading forever. He started waking up before dawn, long before the market opened. Coffee in hand, charts glowing in the dark, Dan would stare at patterns as if they were mirrors. Each line, each candle, reflecting not just market movement, but human emotion. He wasn't just analyzing stocks anymore. He was analyzing himself. Every morning was a mental battle. Because when you go from trading a few $1,000s to holding positions worth millions, your brain starts playing tricks on you. You begin to feel the weight of every tick. A small red candle feels like disaster. A quick profit feels like safety. And before you know it, your mind becomes reactive, not objective. Dan refused to let that happen. He knew the only way to keep growing was to train his mind like an athlete. So he began developing something few traders ever do: emotional conditioning. Instead of focusing on trades, he started focusing on his state. Every time fear crept in, he didn't fight it, he observed it. Every time he felt greed pulling him toward overtrading, he paused. He started seeing emotions as market indicators, signals that revealed what was happening inside his own system. And that's the paradox. While most traders chase control over price, the elite ones chase control over self. Because once you can regulate your internal world, the external world, the market, starts to bend to your rhythm. That's what Zanger achieved. He learned that discipline wasn't about suppressing emotion. It was about mastering your reaction to it. He wasn't robotic. He wasn't detached. He was simply clear. He had trained his mind to operate in what psychologists call flow state, the zone where decision-making becomes automatic, effortless, and deeply aligned with instinct. To reach that level, he built rituals. Every day, the same preparation, the same structure. Charts, journals, reflection. No randomness. No gambling. No noise. He'd review his top setups, the ones that matched his pattern recognition framework. He would visualize them forming. He would mentally rehearse pulling the trigger. He'd even visualize the emotions that would arise after entry: fear, excitement, hesitation, and rehearse how he would respond. This mental training rewired his nervous system, because by the time those moments appeared in real trading, he had already experienced them hundreds of times in his mind. That's the secret few talk about. Most traders think trading psychology is about motivation or positive thinking. It's not. It's about conditioning your nervous system to remain calm under uncertainty. Dan didn't chase calm, he became calm. And that's why he could hold explosive positions through massive volatility while others panicked out. The market is like a mirror. It reflects your level of self-control. When you're chaotic, the market feels chaotic. When you're stable, The market begins to reveal patterns and rhythm you couldn't see before. That's what Dan meant when he said, "The market tells you everything you need to know, if you can quiet your own noise long enough to hear it." It's not the information that changes you, it's the silence between reactions. That's where clarity lives. But let's be real, it wasn't easy. Dan had days where the emotions hit hard. When you're up millions, your brain starts whispering, "Just take it. You'll never see this again." Then, when you sell too early and watch the stock double again, it whispers something else. "You fool. You could have made twice as much." That's the double-edged sword of success. The more you make, the louder your inner voice gets. But Dan had learned to spot that voice. He treated it like market noise, irrelevant, emotional, fleeting. He didn't silence it. He just refused to obey it. And this is what separates a trader who's merely profitable from one who's legendary. The ability to experience intense emotion without needing to act on it. Dan became a master of response inhibition, the psychological muscle that stops you from reacting impulsively. Every decision, every entry, every exit was filtered through that calm space between thought and action. And that's what made his execution look almost supernatural. While other traders were getting sucked into greed or fear, Dan moved like a surgeon, precise, detached, almost eerie in his calmness. He'd say things like, "You don't control price. You only control yourself within it." That became his mantra. He understood that every market cycle, every bubble, every crash is powered by the same recurring emotions. Greed expands. Fear contracts. Confidence inflates. Ego implodes. It's not new. It's the same psychological loop repeating through different tickers, different years, different traders. The only difference is who learns to rise above it. Dan rose above it. He stopped identifying with the market. He stopped saying things like, "I'm losing money." Instead, he said, "The system is experiencing drawdown." That one linguistic shift created emotional distance, a buffer between him and the volatility. That's how he stayed composed when a position moved against him. It wasn't him being attacked, it was simply data playing out. That's a small psychological distinction, but it's everything. Because when you stop personalizing outcomes, you stop bleeding emotionally. And when emotion stops bleeding, performance skyrockets. The human brain was never designed for trading. It evolved to survive, not to hold losing positions, not to manage risk, not to stay calm while watching profits evaporate. So to succeed, you have to retrain your mind against its evolutionary instincts. That's what Dan Zanger did. He didn't eliminate fear. He just learned to interpret it as useful information instead of a threat. When fear spiked, he didn't ask, "What's wrong?" He asked, "What's this emotion trying to tell me about my position size, timing, or conviction?" He used emotion as data. That's high-level trading psychology. It's not about removing emotion. It's about integrating it intelligently. The result? He could stay calm in moments that would break most traders. He could enter when others froze. He could hold when others took profit too early. He could exit when others were still blinded by euphoria. He became the embodiment of emotional asymmetry, reacting opposite to the crowd. And that's why he captured moves no one else did. But there's another layer most people never see. Because when your net worth explodes like that, the pressure isn't just in the charts, it's in your identity. Imagine going from being a pool cleaner one year to a multimillionaire trader the next. You don't just gain wealth, you lose anonymity. Everyone suddenly wants your secret. You start doubting if you can ever replicate it. That psychological shift, from underdog to icon, can be more destabilizing than the market itself. Dan faced that too. He had moments of doubt. Moments where he wondered if lightning could strike twice. But every time the mind began to spiral, he anchored himself back to the same principle. Discipline is not what you do when things go wrong. Discipline is what you maintain when everything goes right. Because success has a hidden danger. It makes you comfortable. And comfort is the death of precision. Dan refused comfort. Even at the peak of his success, he still studied charts late into the night. He still rehearsed. He still trained. He never believed the story that he'd arrived. Because in trading, arrival is an illusion. The moment you think you've mastered the market humbles you. And that's what kept him grounded. Not arrogance. Not brilliance. Just the relentless humility to know the mind is always one impulsive thought away from destruction. If you're watching this right now, and you feel like you've been stuck, jumping from one strategy to another, chasing trades, breaking rules, remember this. You don't need another setup. You need psychological mastery. Because the real account that matters isn't your brokerage balance. It's your emotional balance. And if you can build that, profits become a side effect. Hit that subscribe button, comment where you're watching from, and share this video if this message resonates with you. Because in the next section, we go even deeper. We'll break down how Dan structured his mind for precision, timing, and scaling, and how you can train those same mental pathways yourself. Stay with me. It's about to get powerful. By the time Dan Zanger had honed his mental discipline, he had developed something most traders never achieve: an intuitive radar for patterns. Not just any patterns, high probability, psychologically aligned patterns that revealed exactly when the crowd was about to act en masse. He could scan hundreds of charts a day and see what others overlooked: a subtle consolidation, a tiny flag formation, a micro-level accumulation of volume, signals that screamed explosive potential. To an untrained eye, it looked random. But to Dan, it was a psychological map of market behavior. Every breakout, every spike, every pullback wasn't just price movement. It was emotion captured in candlestick form. Greed, fear, hope, panic, confidence, uncertainty, all encoded in patterns he had trained himself to decode. This wasn't luck. It was relentless study coupled with mental clarity. He would spend hours replaying charts, sometimes years of historical data, memorizing the way certain stocks behaved under specific conditions. He began to internalize market rhythm. And once you internalize rhythm, timing becomes effortless. You stop chasing opportunities, they appear in your awareness. The market itself seems to hand you the perfect setup over and over. But here's where most traders fail. Recognition alone is meaningless if your emotions sabotage execution. Dan didn't just recognize patterns, he detached from the outcome. When a stock started to run, he didn't hope it would continue. He didn't fear it would reverse. He simply executed according to the structure he had studied. Execution in emotional detachment is the difference between making $1 million and blowing $1 million. Because every market surge comes with turbulence. Every breakout carries the risk of reversal. And in those moments, your mind will scream for control, for certainty, for reassurance. Most traders give in. They panic sell at the first red candle. Or they over-leverage, thinking they can force the market to conform to their desire. Dan, he had already rehearsed it. Every fear, every temptation, every impulse had been pre-processed in his mind. So when real-time volatility hit, he acted as if calm was the only option. That's the power of mental rehearsal. It wasn't magic. It was conditioning. And with this combination, pattern recognition plus emotional detachment, he could scale positions without breaking his discipline. Scaling is the silent risk most traders ignore. It's one thing to trade $10,000 responsibly. It's another to trade $500,000 while the market swings 10% in a single day. Dan understood something crucial. The market doesn't care about your account size. It doesn't reward ego. It only rewards alignment. So he built a system of proportional scaling. Every trade was calculated. Every position size aligned with his emotional comfort and mental clarity. He didn't throw more money at a winning trade because it was hot. He only increased size when the setup, timing, and market sentiment all aligned, and when his own internal state was completely clear. Think about that for a moment. The market could explode in front of you, millions in potential profit at stake, and most traders would act impulsively, buying too early, selling too late, over-leveraging, panicking. Dan didn't. He moved with precision because his mindset had been conditioned to scale without distortion. This is the psychology of extreme performance. And here's the deeper lesson. Scaling isn't just about numbers. It's about trusting your preparation, trusting your rules, and trusting yourself, even as the world around you goes insane. Every day during the dot-com boom, Dan's skill set was tested. Stocks would gap 20%, 30%, sometimes 50% in hours. The noise was deafening. Egos were exploding. Everyone was chasing stories. Everyone was panicking at minor setbacks. And yet, there he was, calm, composed, executing trades with military precision, sticking to his pattern-based rules, scaling proportionally, and letting the market reveal its next move instead of forcing outcomes. The amplification effect was staggering, because pattern recognition allowed him to identify high-probability setups. Emotional detachment allowed him to stick to the trade despite volatility. Scaling psychology allowed him to maximize the reward without losing his mind. These three pillars weren't separate, they were intertwined. Each reinforced the other. Recognition without detachment leads to impulsive trades. Detachment without scaling leads to leaving money on the table. Scaling without recognition is blind risk. Dan mastered all three simultaneously. And as his account grew, so did the pressure. Because the stakes became personal. Every million won or lost carried emotional weight. Every decision could reshape his life. And yet, he maintained a mental system that insulated him from ego, greed, and fear. Most traders think you have to be fearless to succeed. Dan's story proves the opposite. You don't eliminate fear. You harness it, channel it, and act in spite of it, with a mind trained to operate at the edge of chaos without tipping over. It's a delicate balance, almost a psychological tightrope. And the higher the stakes, the thinner the rope feels. A misstep could destroy a multi-million-dollar account in minutes. Yet, Dan's system wasn't about perfection. It was about process, discipline, and adaptation. He knew he couldn't predict every market move. He couldn't control every candle. He could only control how he responded. And that became his competitive advantage. By the time his $10,000 had grown into millions, the market had already tested his psychology repeatedly. He'd faced fear, greed, doubt, and pressure, and each time he responded with clarity. That's why his results look almost supernatural in hindsight. Not because the trades themselves were miraculous, but because the psychology behind them was rock solid. And here's the secret most traders never internalize. The numbers don't make you a great trader. The numbers reflect your psychological mastery. The bigger the gains, the bigger the test of your mind. And passing that test repeatedly is what creates legends. Dan's journey teaches us that mastery isn't about finding the perfect setup. It's about becoming a person capable of executing perfectly under pressure. That's why, even today, his story is dissected not for the trades themselves, but for the mindset behind the trades. And if you're watching this and you've struggled with discipline, overtrading, or emotional decision-making, take this truth with you. You can't shortcut the psychology. You can't trade around it. You have to train it, condition it, and rehearse it until it becomes automatic. And that's exactly what Dan did. Every trade, every night, every chart, every emotional test was a rehearsal for performance under pressure. So when the market finally went parabolic, he was ready. Not by chance, not by luck, but because his mind had been sharpened like a scalpel, ready to cut through chaos and execute with surgical precision. And that's what made a $10,000 account become $42 million. If you're watching right now, remember, pattern recognition, emotional detachment, and scaling psychology aren't just strategies. They're a framework for mastering yourself in the market. Hit that subscribe button, leave a comment with where you're watching from, and like and share if this story is hitting home. Because in the next section, we go even deeper. We'll uncover how Dan handled extreme market pressure, public attention, and psychological temptation, and why most traders fail exactly at the point where he thrived. Stay with me. The most intense psychological insights are coming next. By the time Dan Zanger's account had surged into the tens of millions, the world was watching. Suddenly, he wasn't just a trader, he was a phenomenon. Interviews, articles, and financial magazines were analyzing his every move, dissecting charts he had memorized, trying to understand the secret formula behind his unprecedented gains. But here's the critical point. The money itself didn't change the market. The fame didn't change the charts. The only thing that had changed was the psychological stakes. Every position now carried extra weight, not just in dollars, but in expectation. Every trade could be scrutinized. Every loss, even minor, could be amplified in the public eye. For most traders, this is where collapse happens. Success becomes a trap. The pressure to maintain streaks, to validate one's own identity, creates a psychological whirlpool strong enough to consume anyone. Dan didn't allow himself to fall into that trap. He understood something most people never grasp. External validation is irrelevant in trading. The market doesn't care about fame, reputation, or ego. It only rewards the trader who remains disciplined, focused, and emotionally calibrated. So Dan doubled down on the principles that had brought him success. Every morning, he revisited his process. Every setup was checked against his pattern framework. Every emotional impulse was acknowledged but filtered through his mental model. And yet, the stakes weren't just abstract anymore. The numbers themselves were a stress test. Imagine watching a stock move against you when you have 7 figures on the line. The temptation to panic is nearly irresistible. The urge to overcompensate, to hedge excessively, or to exit prematurely becomes a loud internal roar. Dan faced it every single day, but he had already built a mental architecture that insulated him from these impulses. He called it emotional armor, a state of mind where fear and greed existed as background signals, not directives. They informed him, yes, but they did not control him. That's why his performance scaled even as his wealth did. He didn't just survive the stress, he leveraged it as a tool. High stakes became a lens, sharpening his focus rather than clouding it. And it wasn't only about trades. It was about lifestyle, perception, and personal discipline. Dan remained modest, focused, and vigilant. He didn't let the allure of sudden wealth distract him from the process. Because he understood a fundamental law of trading psychology. Success magnifies your weaknesses as much as it magnifies your strengths. He could see the traps clearly. Overconfidence, the classic bubble in the mind that tells you are invincible. Impatience, the temptation to force trades because the money is already at stake. Identity attachment, believing I am a genius trader instead of I follow a disciplined process. Most traders succumb at one of these points. Dan methodically avoided all 3. He treated every trade as a discrete event, separate from his identity, separate from his account size, separate from ego. He didn't see himself as winning or losing money. He saw himself as executing a tested process flawlessly. This mindset allowed him to make decisions under pressure that would have paralyzed almost anyone else. But here's the fascinating part. It wasn't just mental discipline that allowed him to thrive. It was a deep trust in his own preparation. Every time he entered a position, he had already mentally walked through dozens of scenarios. What if the stock gaps up? What if it reverses? What if the breakout fails? He preloaded his mind with potential outcomes, not to predict the future, but to condition his responses. When real events unfolded, he reacted without hesitation, without emotional distortion. This is what I call the peak trader mindset, operating in the zone where preparation meets execution under extreme pressure. And that's what allowed him to ride massive moves, multiply his gains, and survive moments that would have destroyed an ordinary trader. But with this level of performance, temptation lurks everywhere. What do you do when every trade can be a life-changing win? How do you resist the urge to over-leverage, to take unnecessary risks, to let greed override discipline? Dan handled it with rigorous self-regulation. He adhered to rules he had tested and refined over years. He had strict entry criteria, risk management rules, and profit-taking strategies. And he followed them religiously, no matter how tempting it was to bend them in the moment. That's the psychological insight most traders miss. Rules aren't arbitrary. They are your defense against your own mind. And Dan treated them as sacred. He also understood the illusion of control. The market could do anything. It was inherently unpredictable. The only thing he could control was his execution, his mental state, and his process. Focusing on what he couldn't control would have destroyed him emotionally. So he let the market move. He let patterns play out. He let positions run. He observed, analyzed, and adapted, but never panicked, never overreacted. This is why his story is more than a legend of financial gain. It's a blueprint of human mastery under pressure. And here's the subtlety many miss. Money was the byproduct, not the goal. Dan didn't obsess over dollars or media recognition. He obsessed over process, mastery, and emotional clarity. The money came automatically because he had optimized himself as a trader. And that's the hidden psychology behind the $42 million. It's not about luck, timing, or even genius intuition. It's about mental architecture, emotional calibration, and process mastery under extreme stress. Now, this doesn't mean the path was easy. There were days of doubt, moments when the pressure was nearly unbearable, moments when a single mistake could wipe out months of gains. But Dan had built resilience through repetition. Every small victory reinforced confidence. Every controlled reaction to fear or greed strengthened emotional endurance. It's this compounding effect, not of dollars, but of discipline, that allowed him to reach legendary heights. And for anyone watching, this is the lesson. The psychology behind trading success is not about being smarter than everyone else. It's about being emotionally and mentally prepared to execute flawlessly under pressure, every single time. If you're watching right now, take a moment, comment where you're watching from, like the video, and share it with someone who's struggling with discipline in trading. Because the next and final section is where we pull it all together. We'll reflect on the ultimate takeaways from Dan Zanger's journey. The principles you can adopt immediately, the mindset shifts that change how you trade, and the 30-day challenge that will start rewiring your mind to operate like a top-tier trader. Stay with me. The conclusion will transform the way you think about trading psychology forever. By the time Dan Zanger's journey reached its peak, the story was more than financial. It had become a testament to the power of the human mind under pressure. Because if you strip away the millions, the charts, and the headlines, what remains is a psychology finely tuned for peak performance. Dan's legacy isn't measured by dollars. It's measured by mastery over fear, greed, and impulse, the core human forces that derail almost every trader. And that's where the real lesson lies for you, watching right now. The first truth is simple, yet often ignored. Your mind is your most valuable asset in trading. Dan didn't succeed because of a magical chart pattern or a lucky timing window. He succeeded because he transformed himself, emotionally, psychologically, and mentally, into a trader capable of acting decisively and calmly when stakes were highest. Think about that. Most traders fail not because they don't know what to do. They fail because their emotions hijack their execution. Dan's genius wasn't in prediction. It was in emotional consistency. He built a mental system that could absorb volatility without collapsing, a discipline that allowed him to scale wisely, and a detachment that prevented ego from distorting his decisions. That is the framework every aspiring trader must adopt. The second lesson is about preparation meeting execution. Dan didn't stumble into his results. He spent years studying patterns, rehearsing trades mentally, and calibrating emotional responses. When the moment arrived, he executed as if he had already lived through it 1,000 times. This is why pattern recognition is powerful only when paired with psychological readiness. Charts alone don't make profits. Charts plus a conditioned mind. That's what produces extraordinary outcomes. The third principle is scaling with discipline. Dan knew when to increase positions and when to step back, always in alignment with his mental state and the structure of the setup. He treated risk as sacred. He treated his own emotional equilibrium as priceless. That combination created asymmetry, high reward potential with controlled exposure, even during the most turbulent moves of the dot-com boom. And that leads us to perhaps the most overlooked aspect, detachment from results. Dan didn't attach his identity to wins or losses. He didn't define himself by account balances or public recognition. He defined himself by process mastery. By staying committed to the system, he created a mental moat against the emotional storms that destroy most traders. Now, here's the practical takeaway for you. You don't need $10,000 to start transforming your trading psychology. You don't need to catch the next parabolic move. You need discipline, preparation, and emotional calibration starting today. And to help you implement this, I want to give you a 30-day mental mastery challenge, inspired by the principles that made Dan Zanger legendary. Here's how it works. Day 1 to 7, emotional awareness. Every trade, journal your emotions before, during, and after execution. Identify fear, greed, or doubt. Observe without judgment. Day 8 to 14, pattern mastery. Pick 5 to 10 stocks and study historical charts. Notice recurring patterns and annotate them. Mentally rehearse entries and exits. Visualize the emotional state you will need to act with precision. Day 15 to 21, controlled execution. Trade small positions only, focusing on process, not profits. Every decision should be checked against your predefined criteria. Practice detachment from results. Wins and losses are data, not validation. Day 22 to 28, scaling discipline. Test proportional scaling in simulated trades or paper trading. Increase position size only when setup, market conditions, and your mental state are fully aligned. Day 29 to 30, reflection and integration. Review your journal, patterns, and trades. Identify psychological strengths you built and weaknesses to continue refining. Plan the next 30 days based on insights gained. If you commit to this challenge, you won't just be learning strategies. You'll be training your mind to operate like a top-tier trader, capable of handling volatility, pressure, and temptation with composure. And that's the real power behind Dan Zanger's story. Because at the end of the day, trading is not about being lucky. It's not about chasing hype. It's about building a mind that can survive chaos and act with clarity under pressure. Everything else, the money, the fame, the records, are just reflections of that mastery. So here's what I want you to do right now. Subscribe to the channel if you haven't already. Comment where you're watching from. Like and share this video with someone who's serious about transforming their trading psychology. And remember, your journey doesn't start with the charts. It starts with your mind. Start building it today. Rehearse like Dan Zanger. Condition your responses. Detach from results. Scale with discipline. And when the market inevitably tests you, you'll be ready, not just to survive, but to thrive. Because trading is never really about money. It's about mastery. And mastery begins with you.